Hello friends, I hope you all are doing well and staying safe at your own place. I, Sybcom Tax welcome you all on my today's lecture on the subject accountancy and taxation. Friends, we are doing with the chapter of GST, that is Goods and Service Tax. Today, before starting with the new part, let's recall all the points that we have covered till date. First of all, I had started with the introduction, under which we had studied various things, important of which was France was the first country to start with GST. The slogan is One Nation, One Tax. When GST came into force in India from 1st July 2017, there are basically four slab rates, that is 5%, 12%, 18%, and 28%. But for certain specific goods like gold, it is 3%. For stones, it is 0.25%. Second is we had studied the limits of aggregate turnover when you are required to take compulsory registration under GST. If you are dealing with exclusive supply of goods, then the limit is 40 lakhs in normal states and 20 lakhs in special category states. But if you are a service provider, the limit falls down to 20 lakhs and 10 lakhs. Special category states are basically total 11 as stated at the latter part of the slide. Moving ahead, we had done like what principles were taken care of, what principles were considered at the time of clubbing all the previous indirect taxes into the one bucket of GST, under which we have studied four major principles. First was it should be an indirect tax. Second is it should be a part of transaction chain, which means it should be levied anywhere at the time of the transaction. Third is there should be a free flow of tax credit, that is input tax credit, I had explained you. And last is there should be a revenue fairness. There should be a fair allocation of tax revenue between center and state. When there are basic commodities which are kept outside the purview of GST, which means GST is not applicable on these products, which include basically alcoholic liquor for human consumption, electricity, and 5 petroleum products. Next we had covered was dual GST. Just to cut it short, I would like to say if I'm doing any kind of intrastate supply, that is within the state, then I need to pay two types of GST. One is CGST, that is central, and second is SGST, that is state. If I'm doing transaction intra-union territory, that is within a union territory, then I need to pay CGST and UTGST. But if I'm doing transaction which is interstate, then I'm supposed to pay IGST, which means Integrated Goods and Service Tax. Then after, in the last lecture, we had studied advantages of GST and challenges or limitations of GST. And the last topic that I had covered was levy and collection of GST under section 9, which basically talks about 5 important points. First is the maximum CGST that a government can collect from you is 20%. As of now, the maximum CST that is being actually collected is 14%, because I have explained you the highest rate of GST as of now is 28%. 28% is the total rate, of which CGST is 14% and SGST is 14%. As a result of which, as of now, it is 14%, which may increase if government wants to up to 20%, but it can never go higher than 20%. So the maximum rate that we can have of GST will be 40%. That is 20% for CGST and 20% for SGST. Second point is written over here is that on the 5 petroleum products that are not as of now covered under GST can be covered as and when government feels so by passing a notification. Third is what I have explained was reverse charge mechanism. I have explained you generally the GST is collected and paid by the service provider to the government, but sometimes under certain scenario the tax is being collected and paid by the receiver instead of provider. As a result of it, the situations when the charge is being reversed, that is actually कौन pay करता है? Provider, but sometimes who needs to pay the same? Receiver. So when receiver is actually depositing GST with the government, it is known as reverse charge mechanism. The fourth point I have written, if the supplier is unregistered, that is supplier is not having GST registration, but the purchaser, that is the person who is buying the product, is registered, then RCM, that is reverse charge mechanism, is applicable, which means purchaser is liable to deposit GST amount with the government. And last is e-commerce operator, he needs to pay GST as a supplier. If he is not having any kind of physical presence, his representative is liable. If he is not having even representative, then he need to appoint some person who will be liable on his behalf. This is what, friends, we had covered in the last 2 lectures of the subject of GST. Let's move ahead with a fresh topic. The name of the topic on which a short note can come is input tax credit. Let's read it what is written over here. First point, what is input tax? Input tax means CGST, that is Central Goods and Service Tax, SGST, that is State Goods and Service Tax, UTGST, that is Union Territory Goods and Service Tax, or IGST, that is Integrated Goods and Service Tax. So input tax means any kind of GST which is being charged on supply of goods or services or both made to a registered person. So whenever I am charging any kind of this act for any goods or services or both, when such supply is made to a registered person, then this tax is known as input tax. Let's study further. It includes tax paid on reverse charge basis. I have just explained you RCM, that is reverse charge mechanism, under which who is paying the tax? The receiver is paying the tax. So the tax, if being paid by the receiver under RCM, he is supposed to be told as or included in the definition of input tax. Second is tax paid on import of goods. Whenever you are importing the goods, and if you are paying tax on that particular point in any of the name, it can be any kind of GST, fine. But if you are paying the same, it is included in input tax. So basically 2 points are included over here additionally. Normal taxes are included, but additionally, if you are paying it on a reverse charge basis, then also it is included. And second, if you are paying it on an import of goods, it is also included. Only thing is it should be GST. But this does not include tax paid under composite levy. We are having a separate short note on this particular topic, like what is composite levy. Just in short, I can say as of now, for now, is you can either be a regular taxpayer, that is you need to follow all the rules and regulations, or government has given you a simple option. If you want to avail that option, you are going to adopt with the composition scheme, that is composite levy. What is that? We are going to deal in detail in the last part of this chapter, as a result of which I am not going in detail as of now. Just remember one thing, if you are paying any kind of tax under composite levy, it is not a part of your input tax. So in short, I can sum up this entire 2 points like any kind of GST. It may be CGST, it can be SGST, it may be UTGST, or it may be IGST. If I am paying any kind of GST on any of the goods or services or both, to whom I am paying? To the registered person, and this is known as input tax. Moreover, if I'm paying tax on reverse charge basis, or if I'm paying tax on import of goods, it is also included in input tax. But if I'm paying any kind of tax under composition levy, it is not included in input tax. So I hope you are aware like what is included in input tax. Now I'm going to deal with the table that I have stated below so that you can get a clear idea of what I'm talking about till now. Now let's take an example. I am running a cafe, fine. So what is my major business? To produce and serve coffee to the customers. Now, in order to make coffee, what I need to purchase? I need to purchase coffee beans, right? So the first row that I have written over here is I have purchased coffee beans whose amount is 100 rupees. Now let's assume that the rate of GST which is applicable on this product is 18%. So what I have done is I have paid 18% GST on this coffee beans to the supplier, that is the person from whom I have purchased coffee beans. Are you clear till here? Okay. What I have done is I have purchased coffee beans of rupees 100, on which I have paid 18%, that is 18 rupees. 100 ka 18%, it is 18 rupees. To whom? To the supplier of coffee beans. Now a customer is walking into my cafe. I am preparing the coffee and I am selling him the coffee. Now I have sold my coffee at rupees 250 rupees. So the customer who has visited my cafe, I have served him coffee and the price of which was 250 rupees. Now what I have done, I have collected 18% GST, because if I am selling my product, I need to collect GST on that particular part. So what I have done is 250 rupees ka 18%, that is 45 rupees. So what I have done is I have charged 250 plus 45 as GST. So totally I was getting 295 rupees, of which 250 was my basic selling price and 45 was my GST ka amount. So till now the picture is clear. The cost of my raw material was 100 rupees. I have paid GST of rupees 18 on that raw material. The selling price of my coffee was 250 rupees and I have collected 45 rupees as GST from the customer. Now what government will say? GST payable to the government is 45, because I have collected 45 from the customer. So government is going to ask for 45 rupees. But what I will say, sir, I have already paid GST of rupees 18 to the supplier. Remember coffee beans wale ko jo pay kiye the? Yes. So what I will say is, sir, to manufacture this product on which I have collected GST of 45 rupees, I have already paid 18 rupees as GST. So what government will say is, okay, you can take credit of those 18 rupees that you have paid and paid the net GST liability. So it is 45 minus 18 that I have already paid. So the amount is coming to 27. So actually now I am liable to pay only 27 rupees to the government. So you can stay over here that I have taken credit of rupees 18. Now this 18 was nothing. It was the tax paid for the coffee beans. What was coffee beans? It was the input for my particular product. So this tax is known as input tax, and I have taken a credit of the same. So this is known as input tax credit. I hope you are clear with the name. Input means any kind of input that you are going to take for your product, either to manufacture or to sell that particular product. It may be in a form of goods, it may be in a form of services. You are paying GST on that, so it is your input tax. As you have studied over here, what is input tax? If you are paying any amount to the registered person, either for goods or for services, which includes tax paid on reverse charge and which includes tax paid on import of goods. So basically, this 18 rupees credit is known as input tax credit. I hope you are clear perfectly with what is input tax credit. Fine. I'm just giving you a moment. Take a quick overview on this particular slide. Well, friends, I hope you are clear with the example and the meaning of what is input tax credit. Let's move ahead on this particular short note only. As per section 16, subsection 1, the person shall be entitled to take ITC, provided ITC is input tax credit. So you have seen in this particular example that I have deducted rupees 18 as input tax credit. But there are certain conditions when you can take input tax credit. So these conditions are specified under section 16, subsection 1. The first condition is you should be registered under GST. If I am not a registered taxpayer under GST, I cannot claim input tax credit. So the first and the foremost condition which is mentioned over here is you should have taken registration under GST. Second point is goods or services are used or intended to be used for the furtherance of business. If I am paying any kind of tax, that particular goods or service on which I had paid the tax should be used, or it should be intended to be used for the furtherance of business. That I am going to use that particular product in order to do my business or in order to increase my business. Like in our example, I had paid input tax on the coffee beans and I was using that coffee beans to make my final product, which was coffee. So I was basically paying tax on the product which I was going to use for the furtherance of my business. So if you are, suppose for example, I am purchasing a personal mobile and I am paying GST on that particular mobile, can I take the input tax credit? Answer is no, because I am using that particular mobile for my personal use and not for the business. As a result of which you can claim input tax paid on goods and services only if they are either used or they are intended to be used for the furtherance of the business. So friends, we had covered two conditions. First was you need to compulsorily take registration under GST. Second, the goods or services on which you are paying the tax should be used for the furtherance of business. And in the third point, there are four sub points. First is he is in possession of tax invoice or relevant document. If I want to take input tax credit, I need to have the tax invoice. That is, if I was taking the input tax credit on the tax that I had paid on coffee beans, I should have a proper tax invoice, a bill of a coffee bean that I had purchased. As a result of which, first point written over here is you should be in the possession of the tax invoice or something relevant document. Second is he has received goods or services or both. I should have actually received the coffee beans. It is not like that he has promised that he is going to give me coffee beans after a month. No, then I cannot take that particular input tax credit. I can only take it whenever I had already received those goods or services or both. So first is I should be having the proper tax invoice. Second is I should have actually received that goods or services. Third, supplier has actually paid the tax charge. Now in our example, I had paid 18 rupees as GST to the coffee bean supplier. That coffee bean supplier is actually supposed to deposit that 18 rupees with the government. If he has deposited that amount with the government, then and only then I can claim credit for the same. But if he had not deposited with the government, I cannot take the credit. Are you getting me? So अगर government को पैसा मिल गया है, then and only then I can claim the credit. If it is yet to be received by the government, I cannot take the credit as of now. So the third point is supplier should have actually paid the tax which was charged on the particular product. And last is he has furnished the return under section 39. There are certain returns which are supposed to be filed under section 39, so that particular returns should be properly filed with. If it is not filed, then it is not possible for you to take the credit. In short, in the third point, they are talking about four things. First is you should be having proper tax invoice. Second is you should have actually received that goods or services. Third, the supplier from you that purchased the goods and you have paid the GST should have deposited the GST with the government. And fourth, he should have filed his return under section 39. If all the conditions which are stated under section 16 subsection 1 are fulfilled, then and only then you can claim the input tax credit. I hope I'm clear with this particular part. I'm just giving you a moment. Take a quick view on all the conditions that I have mentioned over here. Well, friends, I hope you are clear with the points which are stated over here. So basically, friends, this was the topic of input tax credit, under which we had studied three important points. First was the meaning of input tax credit. Second was the example that I have stated in the form of table. And third was the conditions when you can claim input tax credit. I hope I'm clear with this particular part. This question is likely to be asked in form of short note. So prepare it well. Now let's move ahead to the next part of this particular chapter of GST. We are going to now study different definitions which are given under the Act. So there are certain important terms that you need to learn in form of definitions. There can be a 2-mark or a short note question on this particular definitions. We are going to cover 8 definitions as per your syllabus, fine. So I would just like you to request to try to remember the definition in the words it is given to you. I had underlined certain words so that you can learn those keywords and make your answers much more easier. So let's start with the first one. The first definition is of goods. Like what is goods? So let's read it. First point is it means every kind of movable property. So the first point that is important over here is it should be a movable property other than money and securities. Every kind of movable property, but two things are not included. That is, money and securities are outside the scope of goods. Money is a movable property, but it is totally excluded from this particular definition. So it is other than money and securities. But it includes, what does it include? Actionable claim, growing crops, grass, and things attached to or forming part of the land which are agreed to be severed before the supply or under a contract of supply. Let's understand each and everything that I have mentioned in the first point. First is goods includes every kind of movable property. That is, anything that can move is in the definition of goods. But it does not include two things, that is money and securities. So money and securities are outside the purview of the goods. But again, it includes certain points. First point is actionable claim. Actionable claim is something whenever you are having a claim which is pending on which the decision is yet to come. Such claims are known as actionable claims. So actionable claims are included in the definition of goods. Moreover, I have written over here growing crops, grass, and things that are attached to or forming part of the land. You all know that if I'm talking about any crop which is still growing or the grass, these things are attached to the land. So basically you will say, sir, ये तो movable नहीं है. But I have written over here which are agreed to be severed before supply or under a contract of supply. So whenever I am entering into a contract of selling that particular part, I have agreed that I am going to sever. That is, I am going to cut that particular part from the land so that it will become movable. So as of now, what is its condition? It is immovable. Why? Because it is attached to the land. But I had entered into a contract that whenever I am going to supply this particular product, I am going to sever it. I am going to cut it from the land, as a result of which I can easily move that particular product so that it will become movable. In short, friends, you need to remember certain points in this first point. First is every movable property is under the definition of goods, but it is not included two things, that is money and securities. But it includes actionable claim and every kind of crops, grass which are attached to land, which are agreed to be severed, to be cut off before the selling. In this situation, all these things are going to fall under the definition of goods. Second point is intangible assets. I hope you are aware, you had studied in accounts what are intangible assets, like royalty on mining lease, carbon credit, electricity, copyright, trademark. All these things are also included in the definition of goods. Now basically these things you cannot say they are movable, fine, but they are still the part of the definition of goods as per GST. Royalty on mining leases, basically you have provided your land on which mining activities are being undertaken. Now whatsoever minerals are being mined, you are going to get a particular percentage of that. This percentage is known as nothing, it is known as royalty. Second is carbon credit. Carbon credit is basically there is a particular amount of pollution you can do which is permitted if you are running a factory. Now if you feel that you are permitted to do a pollution of suppose 10 points and you are running a factory or you are running a manufacturing business in which pollution is occurring only of 8 points, so you are left with residual 2 points, you can sell those particular 2 points of your carbon credit to someone else, that is some other factory. This is sellable and this is also a part of your goods. And I hope you are clear with like what is copyright, trademark, etc. In short, intangible assets are also included in the definition of goods. And the last part is the definition of goods is inclusive. I hope now you are clear with these two words, what is inclusive and what is exhaustive. Inclusive is something under which we can add anything whenever we feel like adding. But exhaustive is something we cannot change this particular definition. We cannot add anything further. As a result of which, the definition of goods is inclusive as per Article 366 subsection 12 of the Constitution of India. So the definition of goods which is given in Constitution of India, that was inclusive definition. But the definition of goods that we are studying in GST, that is this wala definition, it is exhaustive definition, which means we cannot add anything to this particular definition. So the definition of goods that I am teaching you as of now is an exhaustive definition. I hope friends you are clear with this. Now why it is important to study this definition? What we are studying? We are studying GST. The full form of GST is goods and service tax. So to understand GST kya hai, first of all I need to understand like what is goods under the act and what is services under the act. So I'm going to explain both the things today itself. We are done with the first one, goods, every kind of movable property, but it does not include money and securities, but it includes actionable claim or anything that is growing crops, grass or any other things which is attached to land but which is agreed to be severed before supplying. Intangible assets are also included in this particular definition. And lastly, it is an exhaustive definition. I'm giving you a moment, take a quick overview on the points that I have stated on this particular slide. Well, friends, let's move to the last slide for today. It is definition of services. We have already seen like what is goods. Now let's check out what is services. Let's read it out. The first point is it means anything other than goods, money, and securities. That is, anything which is other than goods, money, and securities is going to fall under the definition of services. But it includes activities related to the use of money or its conversion by cash or by any other mode from one form of currency or denomination to another form of currency or denomination for which a separate consideration is charged. You would say, sir, आपने बहुत सारी चीज एक साथ पढ़ ली. So let's break it up and study it once again. The first line that I have stated over here is it means anything other than goods, money and securities. So goods, money and securities के अलावा जो भी सारी चीजें आएगी वो कहाँ पे आएगी? Services में आएगी. But they have made a specific mention that if I am involved in any activity relating to use of money, like for example, I am a financial advisor, and what I am doing is I am into the business of how to use of money, and I am going to charge a separate consideration for a change. So I am into an activity relating to the use of money. Second is conversion by cash or by any other mode from one form currency or denomination to another form currency or denomination. For example, you may find there are certain foreign exchange traders. Fine. What they do is they exchange your money. For example, I want to go to USA and I want to purchase dollars. What I'm going to do, I'm going to pay money in Indian currency and I'm going to get dollar as a currency. Now what I've done is I have changed the form of currency. That is, I have sold my Indian rupees and I have purchased the dollars. Now that person, that is an exchanger, is going to charge his fees for this particular transaction. If I am doing this particular activity, the service that is being provided by the exchanger of changing the form of the currency is included in the definition of services. So what I want to prove over here is if it is money, then it is not included. But if it is related to money, like changing the form of money, changing the denomination of money, for example, I want currency of rupees 100. So I am having 1 lakh rupees. What I am doing is I am directly giving you the check of 1 lakh rupees and you are giving me 100 rupees ka bundle of 1 lakh. Now for this transaction, you are charging 50 rupees. Fine. So what you have done is we have done nothing. We have changed the denomination of money from one form to another. But since a separate consideration was charged by you, you are supposed to be said to be providing service. So this activity is going to be the part of service. So if I'm directly supplying the money, it is not a part of service. But if I'm doing any activity which involves money for which I'm charging a separate consideration, then that particular activity is going to be the part of service. So it is as simple as this. Direct money is not a service, but any activity which is related to the use of money or conversion of money from one form to another, from one denomination to another, from one currency to another, for which a separate consideration is charged, then it is going to fall under the definition of service. I hope I'm clear with this particular part. Second point that I have written over here is any economic activity which is resulting into value addition. Fine. For example, I was having a flat which was totally blank, that a constructor has constructed a building and provided me the naked flat. Now what I have done is I have appointed a painter and he has painted my entire house. Now what he has done is he has added color to that particular flat. So he has done certain value addition. If any value addition is involved, then such economic activities is also be going to be the part of services. So painting is basically the service which is being provided by the painter. So this is nothing, this is a value addition. Last is instantly perishable in nature. You very well know that services are basically perishable in nature. For example, teaching. Fine. You come to my classroom, you get the knowledge. So whenever I'm speaking and giving you the live lecture, you are going to hear it. Once the lecture is over, you cannot retain that particular. So this is known as it is instantly perishable. It is served one at a time and then it is done. You cannot retain the services. Similarly, that is the particular part that the services which is being provided are basically instantly perishable. For example, I'm a chartered accountant and a client comes to me for an advice or a consultancy. So at the time I'm giving him consultancy, I'm giving him service. But as he receives the consultancy, the service is over there. It is totally perishable. He cannot keep my consultancy for his life. Fine. So in short, what I want to say is services are of the nature which are perishable. That is, you cannot store or retain that. Once it is given, it is dead. So it cannot be stored. I hope, friends, you are clear with both the definitions that I explained you today, like what is goods and what is services. From the next lecture, we are going to see further with certain technical definitions which are likely to be asked in your examination. Today, we had done nicely with three topics. First was input text, under which we had done three things: meaning of input text, second was example of input text, and third was condition for claiming input text credit. Second was definition of good, and third was definition of services. With this, I, CA Pujin Kapadia, thank you all for your patient listening and hope to see you soon on my next lecture. Thank you, friends.